Three private equity IPOs in the U.S. have priced lower than expected this week. So with a little insight on the trend, we partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Luke Templeton joining us now from London with more. So Luke, it seemed as though private equity IPOs were back in fashion at the beginning of the quarter, but maybe investors are having a change of heart now?
Yeah, that's right. Since the IPO market began to reopen at the beginning of the quarter, since then it seems like private equity sellers have been surfing a bit of a very difficult point break. Some have caught the waves and others have wiped out. Now, this week in the US, we've seen three private equity IPOs from Blackstone, Goldman and Carlyle, and now TPG, which have all priced around 20% or more below what they were expecting.
So that's what's going on in the U.S. Sorry, Luke, I didn't mean to cut you off, but I want to know, is that what you're seeing in Asia and in Europe as well?
Yeah, that's right. This month, Carlyle in Asia listed two Chinese companies in Hong Kong. One priced right at the top end and did well, one priced right at the bottom end. We're not seeing a lot of consistency. The same picture in Europe as well. Now, the reasons for this could be twofold. Firstly, it could reflect a lack of investor appetite, but given the amount of banking rights issues that have been picked up by investors, sort of equally risky sort of asset class, I think that's fairly unlikely. More likely is that private equity firms are just trying to ride the economic recovery a little too hard. Now, they're under a lot of pressure to deliver returns to investors. Data researchers estimate that IRRs for 3 years for private equity firms are almost zero. So it's no surprise that it's been suggested that each of these three IPOs in the US this week have been valued above their peers in terms of tangible book value.
So, Luke, I mean, what's the outlook for early 2010?
Yeah, well, a lot of investment banks that we have spoken to have been talking up about their equity capital markets pipeline. Private equity is expected to list a lot, and we'll see a flood open up in the new year. I think, though, that that's fairly unlikely. We will see some IPOs, but not as many as the market expects. And that's because private equity sellers need a bit more certainty in the market before they go back to their investors and say, we've either made a profit or a loss. So just look out for a little bit more of a restrained market.
Luke, we thank you so much. Luke Templeman there joining us from the FT on Lex.